Hello everyone, good morning. Today is Monday, July 18th. I'm going to be recording today's session, seeing if we can get anything good out of it. And I was basically just analyzing everything that happened through midnight London and pre-New York, kill zone. And I've gotten the sense that we're likely to see a bullish day, mostly due to what happened through midnight. Also, my weekly analysis does tell me that as well, because I am expecting somewhat of a retracement up to something that then retracement up to something, right? That maybe we take the high of the previous week high, yes, to continue to go lower. Or we just get inside the fair value gap on the weekly, we get inside of a daily fair value gap, such as one of these two, right? Just something that could indicate me a bearish potential for the week, right? I'm expecting a bearish week. So that's pretty much the reason why I could be expecting buys today. But again, just up to this high, which price got pretty close to if we go down to the 1 hour. You'll see how this high got really close to it, and it has mitigated something in there. Also, we have had some sweeps of liquidity, but nothing good enough in my opinion to consider a bearish trend. But if we do get some confluences to sell, of course we're going to do that. Okay, so if I'm expecting bullishness for the day based on London, and I say that because we have London sweeping a low, running on sell-side liquidity, and then we see aggression higher, buy-side liquidity, retracement, mitigation of a fair value gap in the 15, aggression higher, takes buy-side, and basically just creates that higher high to continue with the trend. So that was London kill zone, and now pre-New York basically just continued with that trend, sweeping London's high. Now we're seeing somewhat of a retracement, not very strong though, so we do have to keep that in mind. There's no a lot of aggression, a lot of displacement on it, but we do get an impulse overall, right? So as an example, we could see this low being taken, which in my opinion is either good nor bad for the for neither direction, I say, because we could consider this as sweep on buy side, sweep on sell side, displacement, entry, right? This is something that could definitely happen, which is mostly what I'm expecting. I would like to see a low being swept on just a low being swept, so a run on sell liquidity that will then lead for price to create displacement in the 5-minute that we can then look for inside that 5-minute fair value gap, 1 minute displacement to enter, right? Which gives us a little bit of a more precise entry and an overall better setup, right? Only thing that is a bit riskier doing that is the 1 minute stop loss, because stop loss, as an example, below this low or below the low that could be created here on the 5-minute is going to be much more safe, much safer, right, comparing to the stop loss in the 1 minute, as the 5-minute has to be respected, or otherwise it's just not going to work out. But the 1 minute can fail while the trade or the setup or the direction will still work out. Okay, so we're pretty close to the open. I'm not gonna be recording through it, so I just wanted to do this little bit of an introduction, just say what I'm looking for today. And again, ideally we see price trading below this low here, then displacement higher on the 5, creates a fair value gap, price trades into that, and in the 1 minute we see displacement, 1 minute entry, and we're looking for this high at the very least. Hopefully, not hopefully, but ideally we'd go to the previous week's high, right? As we're pretty close to that, and it's a good amount of sell-side liquidity, buy-side liquidity is just pending there. So we'll see about that. So for the open, either run on sell side or just displacement higher that generates fair value gaps, and that'll be pretty much it. From the 15, we don't really have any fair value gaps so far. 5-minute did have some, I think. Yeah, we have one here that hasn't been mitigated. So phase one fair value gap, and also a tiny bit of a sweep here, this high, swept this high. But again, nothing that interesting or important for now at least. And yeah, that's really pretty much it. That is really pretty much it. We just gotta wait for the open, see what the open does, and if we get anything cool out of it, and I'll be here showing it too. So yeah, let's just wait for it. Okay, so we have had the open already. It's been a couple of minutes, and on the 50-minute we do have a fair value gap in here, right, from phase one basically. Phase one also caused, well, not caused, but run on sell side liquidity, right? So run, okay, run on sell side liquidity. Let's put that to bottom and right, and that makes me understand that, well, not makes me understand, but it does allow me to continue to think that we could have a bullish session. But of course, we still need confluences to buy. We can't just buy because of a run sell side liquidity. So ideally, we would have seen this candle, well, just as it was, basically aggressive, but the next candle should have now basically covered the potential gap that we had there, the potential fair value gap that we had there. So it immediately retraced, filled that gap, and now continuing higher, potentially. And, well, again, we have now a 15-minute bearish fair value gap. 15-minute, my bad. Save as R, yeah, okay. 50-minute FPG, okay. I'm gonna have to change that as well. Inside, right. Okay. 50-minute fair value gap. We also have a 5-minute in there, which we could try and refine down to, but it's better to just have them both and see how they play out, if they do. Sorry, this one's 50. So what is it that we have? As an example, on the run and sell side liquidity, 830 open is here, right? And we see immediate displacement, which generates a fair value gap, which price has traded into, and well, for now at least, has been respected. So that could have been a buy, but for me, again, for me to buy in this scenario would have been the sweep on sell side, a 5-minute displacement, so creating a fair value gaps in the 5, and well, after that I would have needed just price trading back into it, creating 1 minute fair value gaps, creating 1 minute displacement. If we see a sell side liquidity, or sorry, a run on sell side liquidity, or even a market shift in the 1 minute, then even better. But again, those are not things that I find necessary, at least from what I backtested, and they do happen rarely, like a run sell side liquidity along with a market shift. They happen rarely, and to be fair, the ones that I've seen have actually worked out, but not necessarily all of them have, right? But the grand majority of them. So when it reaches this level, or these levels, we'll be looking for something. You know, we also have a tiny bit of liquidity here, which is great. But if I see immediate displacement in the 1 minute, then I'm probably going to try and sell. But again, I'm still quite bullish. But would love to see somewhat of a retracement, a larger run on sell side, because in my opinion, this is just relatively equal lows. Right, so there's a lot of sell side liquidity pending down there, and just if that just happened, then it'd be great. If price went lower from that level again, it'd be great. And I guess we'll see. I guess we'll see. For now, we don't really have much. Could have tried to buy from that 1 minute displacement, but not good enough for me. And yeah, for now, that's really all that I can say. I'm gonna set an alert on the 5. I'm pretty confident that we're likely to hit the 5, not just the 15. So yeah, I'll put an alert on that, but I'll be monitoring it anyways. And to buy, again, 5-minute fair value gap bullish. The price trades into and creates lower time frame fair value gaps. To sell, 1 minute fair value gap after mitigating this. If it has a market shift, then even better. If it has a side liquidity, buy side liquidity being swept, then even better as well. We do have some here that could be swept when mitigating this 5 minutes, so that's great. And that's really pretty much it. We'll see how things work out. All right. So phase one, run on sell side liquidity. phase 2 starts aggressively higher against the trend that was set by phase 1. But again, displacement after runs outside liquidity, so in my opinion, bullish. Doesn't create a fair value gap at first, then it does. Currently reacting at a various 15 and 5-minute fair value gaps, because we have a tiny bit of liquidity that has now been swept, but we haven't really seen much aggression from this candle, which would have been ideal to count it as a potential good sell. So at the time, the only real thing that I can actually do is just wait for price to trade into this fair value gap, or this, to then maybe consider buying if we get a fair value gap in the 1. But for now, that's gonna be a bit complicated. Ideally, we're getting a trade between 8:30 and 9:30, which allows us to at least go above this high, or we'll just ride the entire move of the session, right? That's kind of what I'm looking for. And basically, for now, this is really all that we can play with, right? This is the only thing. We'll see if the 15 creates a fair value gap, but that's, in my opinion, a bit unlikely. We'll analyze it anyways, of course. Let me hide this. Let's just see it in the 5. But still quite bullish. Reason why, as an example, I was seeing this reaction and I thought maybe we could get a sell here, but I was not really interested in it because price was just coming very bullishly. Crashed in 1 minute. We even had this down here. That could have been a very nice entry. I mean, we're talking about an entry at this level here. Stop loss. Well, stop loss should have been below this low approximately. Currently, we'll be running at 2.2. And if we're looking for that high, well, we're going quite far. But potentially 8R. But again, those kind of entries are just not something that I'm looking for. I'm used to looking for exactly what I've said I'm looking for currently. So that's exactly what I look for. Yeah, nothing for us to do right now. I'm just gonna set up an alert here. And for me to sell right now, I just find it highly unlikely for me to sell. Honestly, I just can't really do that. At least not right now. I don't think a 1 minute fair value gap will be enough at this point. We do have tiny bits of liquidity and this and all. And yeah, for me, it doesn't really make that much sense right now. So now, for now, we're just going to be avoiding. We'll see what happens with this bullish fair value gap. And after that, we'll just wait for something. Alright, so this is where things get a little bit complicated, because now we have the opportunity to sell as we have the opportunity to buy. Well, we actually don't really have the opportunity to buy it just yet, but we could have in a couple minutes. And have a 1 minute fair value gap after mitigating a 5 minute order block and fair value gap. The problem is the trend, because we're not really expecting bullishness after running on sell side, you know? Unless we thought that sell side was taken as, sorry, it wasn't taken, just created more buy side. So I could be selling as I could be buying. But I'll do a demo. I'm gonna sell from here. Sell with the stop loss at 373. 373. 1%. What just happened? Okay. I'm gonna be selling from there with paper trading, but I'm more interested in the buys at the time. I might be selling something, but of course, as an example, if I saw a 5 minute fair value gap and price traded into that and gave me a 1 minute fair value gap as well, then I'm definitely gonna be selling. But right now, I'm much more inclined to buy due to the fair value gap in the 5. That happened close after run on sell side, which again, in my opinion, could be just manipulation to create more liquidity more than an actual sweep, because it barely swept the low, but it, believe it or not, is more than enough. So this could have been run on sell side, right? Retracement to take stop losses, and now continuation of the trend. Either way, more interested in the buys. We'll see how things turn out. I also have a 2 minute fair value out there about this week, or this one. Might have put them, but no. Will I take it or not? It's a big question. We do have the confluences because at the end of the day, it is a fair value gap that generates a lower time from entry. So a higher time from fair value gap generate a lower time from fair value gap. It's just not good enough for me. Now I'm not going to be taking the sell in my Forex funds account. I will wait for this to potentially create a fair value gap, and if it does so, then I'm definitely buying. Yeah, we need a couple more minutes, so nothing for us to do right now. Alright, so the bullish trend probably failed. We could have tried and sell from the 2-minute fair value gap, which would have been ideal. Maybe even, no, 3-minute was not mitigated. 2-minute could have been fine. But again, it's just a bit difficult because as well, we do have this buy side being swept and then movement lower. Not a lot of displacement, to be honest, but definitely something that will ended up causing a change in the trend. But I don't know, it's still pretty bearish in my opinion. Not really bullish at the time. Sorry, still pretty bullish at the time, not really bearish. But we'll see what happens if this is created and price trace into it. I'm gonna be looking for sells, but at the time I'm still thinking on the sells. We'll see how things will turn out after this, but yeah, could be selling from here. 2-minute mitigation, 1-minute mitigation now. But yeah, not interested in that for now. So just wanted to say that tiny bit of an update, and potentially we're likely to see a retracement that then generates other entries. If that happens, then I'm gonna be in on it. But for now, nothing for us to really do. Okay, currently just watching the reaction, seeing that we might have might get a 1-minute fair value gap bullishly. But due to how the bearish side reacted, I would like to see a market shift before trading into this fair value gap, which it might do now. And bearish side at the time, I mean, it's still valid, although I do like bullishly how that 5-minute was closed, right? It just looks quite well, not gonna lie. But doesn't really say anything, at least not at the time. Price traded inside the fair value gap. Could have taken that again, just waiting for something else. But the entry could have happened already. And honestly, there's not much that I could do about that. And of course, if we had a pretty strong reaction from the 5-minute fair value gap bearishly, I'm definitely going to be looking for something, but yeah, still need for it to get there first, clearly. I'm pretty sure that we don't really have much on 2 or 3. Yeah, no. We might get a 2-minute fair value gap in there, so you can see there. But we're interested in the 1 for now. Yeah, if it trades back into the 1-minute market, fair value gap, I will likely be taking this, which is it is coming back. I can't really, for me to count a bullish fail will be below this low, but at the same time we will get a good run on sell side, which could cause a continuation higher. So can't really say that will cause the bullish fail. Of course, it did fail at that time, but we then could see still some more bullishness. I want to see what happens when price gets here though. But yeah, we will be making a buzz. We'll see what price does in the next few minutes. If we get a clear fair value gap lower, I'm definitely going to be taking a sell, but I'm much more inclined to buy at the time. So yeah, I guess we'll find out in a couple minutes. I'll leave the computer for now. We'll look at it from the phone and come back if there's anything important to talk about. Okay, so the trade that you heard me place around this level is for now working well. We did get other entries such as this one, and this one, right? Based again on direction, the only thing that I didn't really like was that we didn't really get the market shift before it. Reason why I ended up risking a 0.5 instead of a full percent. But yeah, trade is going well, just going above this high as I need 3R. And after that, we'll likely just not trade for the rest of the day. Already at break even the stop loss, so I don't really worry about that much. And going for this high, although likely, just likely, we could see this happening. Right, so not something I'm very interested in handling at the time. Honestly, it's Monday, so I'm not really interested in doing that. But if it happened, it'd be nice to see it happen, right? Just that. At the same time, we could be looking for the previous week high, which let's look at where it is. It's not really that far. I'm actually pull it closer. And we'll change the visibility to minutes as well. Then we do this, that, this again, that again. And okay, this could be the target, which is a tiny bit higher, 9R, potential 9R that we could see happening there. Let's put this down here. Supposing the higher move is going to continue. And yeah, just wanted to mention that. We'll see how it turns out, if it turns out well or not. A pretty cool opportunity, just based on what we usually do. I don't like spending time in the charts when the trade's open. I've analyzed everything that I needed to analyze, so that's pretty much it. We'll see how things turn out. All right, so that's really pretty much it. Trade close at 470, which is a couple ticks above right there. 470 was just above this high, right? And 3R, basically just taken out of there. Lovely entry, lovely out or exit, better said. If I was looking for a little bit of a better target, I would probably aim above this highs, right? Which look like equal highs, although there was a sweep. But those could be a good target, which is pretty close to 5R, so it'd be good to see that going there. What I do want to check is the 1 hour, because I do believe that there might have been a fair value gap there. Yeah, okay, so we are trading inside a fair value gap, which is right where my take profit was. That's interesting. So yeah, we could see a bearishness from this fair value gap, but again, I'm still thinking that the weekly high, the previous week high, could be taken. So if that happened, that'd be great, honestly. Yeah, just wanted to say that. Lovely. I'm gonna be leaving already. Just taking a take profit really early in the morning is good enough for me. So yeah, that's a good Monday for me. Let me actually put that I took the trade out here. Let's not do it like that. Let's just do it like this. That's pretty much it. I might record the resume along with this. Yeah, I could do that. But yeah. So let me just explain a bit how we took this. Phase 1 was, let's analyze everything from the 5. Phase 1 was price trading against what I expected to be the trend. I expected the trend to be bullish due to the to London. We have a run on sell side and then immediate aggression higher. Price continued higher through pre-New York. We see a retracement through the open of New York. Through the open of the New York kill zone. So what I consider phase 1 from 7 to 830. Retraces, move against the trend, run on sell side liquidity. And then we see aggression. Generates a 5-minute fair value gap where I was looking for entries. We go down to the 1 minute. We can see that price, let me I did not mean to do that. Let's just draw this. This is the 5-minute fair value gap. Remember that it doesn't matter if it breaks it or anything like that. As long as the low that created it or that created the entire move is not broken, that's still valid. We can still look for entries. So no fair value gap in here in the 1 minute. We see aggression, which in my opinion ended up being run and sell side, immediate aggression higher, fair value gap. I would have liked to see the market shift before taking the entry. Nothing for me to do about that. We do see the market shift here, and we also do get a fair value gap here, which actually could have been a much better entry, I think, because we're talking about entering here below this low, stop loss here. It's actually quite close. It's just a couple of ticks less of the stop loss. So it's not much of a big difference, but as you were able to see, we could have gotten 3.6R there instead of 3. So yeah, definitely. So pretty good entry. Based on what I look for, I just look for a run and stops that then generates displacement in the 5 minute. When the 5 minute fair value gap is traded, I look into the 1 minute, the 2, the 3, the 4, whichever creates the fair value gap first. Very likely taking that. Or as an example, if the 1 minute creates fair value gaps but it doesn't mitigate them, then it's likely that the 2 minute, the 3 minute, the 4 could be created as well, and we should be paying attention to that, as price could mitigate those instead of the ones that we were looking at in the 1 minute. So for me, that's pretty much it for today. I will be coming back to record the rest of this video with the rest of the day, right, with the obsidian, as I did a couple of times already. And that's really pretty much it. Hope you enjoyed this session, although it was pretty short, and I'll be seeing you until the next one. Okay guys, let's do the resume of today. Just took the one trade that I showed. Really lovely trade. As you can see, it actually got to the previous week high, and well, the weekly fair value gap, and haven't actually checked the daily chart, but it hasn't really reached the fair value gap on the daily, which is a shame, but you know, it doesn't really matter. Just was a good thing that could have happened, but just didn't happen, you know. So we'll delete everything. Not necessary, but just find it a bit better to just do it from scratch to do the analysis and or resume, better said, from scratch than just doing with what I have, because during the session I tend to just draw a lot without really caring that much about how it looks or anything like that, which is understandable, but really just prefer to have cleaner charts. So it was a pretty clean session overall, as you were able to see. We just had the direction based in London as it swept the low, and then immediately started aggressing, or not aggressing, but just going aggressively higher after that. And what that told me is that we could have a bullish session, and honestly, phase one for me just gave me the notch that I was potentially right? And yeah, this is what we have. And I like doing it from the 5 because it tends to have a bit more detail. So I'm gonna do the notes and come back with you. Okay, so as you can see, this is pretty much all that I kind of want to have on the screenshot, which is as soon as London Kilson begins, it runs on a clean low, and then we can see price displacing higher, creating fair value gaps in both 5 and 15. On pre-New York, it basically just followed that trend set by London Kilzone, and for the session, I tend to just explain it separately, so that's what we'll do. This is actually wrong. It's 18 today. Okay, so this is day's price action. Midnight in London is playing a picture. And I will go with session screenshots. My bad. Session screenshot, which will just delete all of this, as we don't need it. And this is what we have. And we need to include the entire thing. 70, what was the level I deleted it. Ah, shit, I think I did. Yeah, I'll do it now to not get it messed up. Weekly, yeah, that's the high. Hopefully I will be able to see it. Yeah. I hate that it... Okay, let's do the next. So it's 834. 834. Me do it like this once again. Okay. 134. Wait, 934? Oh shit. 834, I think it was. Yeah, let's call it 834. Otherwise, I mean, it was pretty much close to this, so it doesn't really matter. Middle, center, no, not middle, sorry, top, 12. This level is previous week high. Okay, yes, okay. Now the London's, well, it's actually not a low, it's not London's low, it's just a low, so it's just on the sell side liquidity, pretty much. What else? Phase 1 move against the trend and run and sell side liquidity. Let's actually do it like this. The reason why I mentioned this, it's because when I was analyzing a couple of weeks or probably a month or so ago, when I was studying with ICT's concepts, what I did was just check what happened through through session, through London, through midnight, through pre-New York, and basically realized that, as an example, phase 1 tends to move against the trend, in some cases running on the sell side, running on the buy side, depending, right? And then continues completely against that move that happened through phase 1. So that's the reason why I say that here we have a move against the trend, and for me that's something that tends to happen through phase 1. That's the reason why I mention it. Also, a move against the trend, we can't really know if it's a move against the trend until this happens, right? But knowing that through phase 1, that tends to happen, a move that is later just overruled by the session open or just phase 2, however you want to call it. It just makes me believe that this is actually a good confluence. So as an example, in some cases, I can count it as a confluence in my favor, right? So I was expecting a bullish move. This happens through phase 1, so move against the trend, and then if we even get the run and sell side liquidity, that was good enough for me to believe that we could have a bullish session. Reason why, as an example, I ended up not taking the sells that we did have, and the reason why I ended up taking the trade that I did we had down here, and ended up in a take profit that, well, as you were able to see in the video, we could have either gone above this high on previous week's high, which either way we're talking about 5R here, 8R here, 9R here, so probably would have gone for this, or would have gone as far as this. I don't think I would have gone for previous week's high, because that's just risking it for an extra R, right? And that's just not something that works for me, so yeah. Okay, so phase 1 was move against the trend and run outside, which is good enough. Keep listening to this song for some reason, I don't want it. Phase 1 was move against the trend, run outside liquidity, pretty much it. Phase 2, let's put it in this tiny bit of a box. Let's actually do it on Obsidian. I don't want to do it here. It'll be a bit better. Is that all that I really need? Yeah, I'm gonna point out what is the low of this candle? 421. 421. Okay. I'm gonna point out the fair value gaps. The ones that were mitigated, obviously. The other ones I don't really care that much about. Not because they're not important, but they weren't important during the session, so it's good enough for me to just ignore them. These two are what I consider phase 3 fair value gaps. They just happen pretty late. That will tend to just follow the trend. Potentially the easier point to enter, because supposedly we already have the trend set for the session, but that doesn't really mean that it will hold, right? It just means that price has been going in this direction. It's likely to do that, but if we catch a move down here at the beginning of the session, as I mentioned on the video, on the live session on that, we tend to have the move of the entire trend if we enter around the 8:30 open, right, or close to it at least. So yeah, I think that's really all that I want for now. Let's go to Obsidian, session screenshots. Phase 1, run against trend, balance sets out liquidity, literally nothing more than that. Phase 2 was moves against phase 1, mitigates, it creates 5-minute displacement. It's worth mentioning that. Creates 5-minute displacement, mitigates bearish fair value gap. No lower time from entry. Did we have a lower time from entry on the bearish fair value gap? Highly doubt it. So fair value gap was here. Yeah. Yes. Yeah. Oh, okay. So the 5-minute fair value gap from phase 1 was this one, and then the phase 2 creates another fair value gap, right? Which price trades into but doesn't generate any kind of entries. But we do have 5-minute fair value gap from phase 1, right? 5-minute. And we see this. So this could have been an entry, or then we saw the 2-minute that could have been an execution as well, which I thought about taking, but ended up focusing on the buys, which thankfully enough was the right choice in this case. Literally pretty much it. We need the entry. Remember that we had that initial entry. As you can see, that it's not that it failed because the stop loss sort of went down here, but as you can see, it would have retraced again anyways, which is kind of what I was expecting on. I think I said something about that here on the cells. So doesn't really matter at that point, nor at that point either. But yeah, just wanted to mention that. I really liked how the entry was executed at 298. Literally, is that the low of this? No, the low was one tick above. This, and stop loss was 240. We'll leave it like that for now. Just that. So a tiny round of sell side mitigation. Okay, let's just do it like this. Shit, my bad. Tiny round sell side. Displacement higher. Lower, not lower time frame. 1-minute FVG execution. Pretty much. Let's put this a bit larger. And we also have multiple entries. Let's actually delete this so it's a bit cleaner. Can we? We can, but I don't know how people do that. Oh, that's not what I meant. This is what I want. There's another entry in here. I know there's a way. Okay, yeah, that's not the way. Not ideal, understandable, but you know what? Fuck this. We'll delete this. This is one of them. And this is the other one. And then there's another one up here. Let's put it like this so it looks a bit better. And that'd be it. Yes. I kind of do want to show this, don't I? Yeah, sure. Okay. It's a very basic entry overall. A bit complicated due to the fact that it barely ran on the sell side. As you were able to see, I did question a little bit the fact that it barely swept the low, so it could be more sell side liquidity being just left there to now take, maybe then continue with the bullish opportunity. But thankfully I was able to just take advantage of it. You know, it could have been a loss, so after that just look for something a bit cleaner. All right, so trade number 1, it's kind of explained in the picture, but I do like having it here. So phase 2, phase 2, 5-minute fair value gap. 1 minute is tiny run on sell side. 1 minute displacement. 1 minute execution. Fair value gap, basically. I mean, it's really not that much more to add to it. So that's it. And is that the only opportunity? Let's actually check what happened through phase 3. Which, oh yeah, I do. Okay, so you can see it does mitigate this. There's a very tiny fair value gap in here. I don't know if you can see it. Let me actually zoom in a bit more. From this high to this low, right? Very tiny, but it's not mitigated either, so it's just not something I'm gonna talk about. So definitely works out, but just price didn't really give us a fair value gap that is mitigated. Then there's this 5-minute fair value gap, and price mitigates that tiny run on sell side liquidity with the 1 minute, and you can see that it does generate another entry there. Very tiny as well. Good enough though. For what I've seen, honestly, the size of the fair value gap isn't really that important as long as there's one. And shit. And question is, how far are we? Oh yeah, we were literally next to the week's high, so this would have been impossible because this would have been our target, and that's a 1-to-1, which is fine, but not ideal. So I'm not gonna talk about that one either. And I think that's pretty much it then. I need the conclusion. So that's the conclusion I left to myself. That's pretty much it, honestly. I do want to do a video plus 3R could have been 5R. Let's call it real target 5R, because I don't think I would have allowed it to run as far as it actually did, right? And I don't mean like this point. Of course, I wouldn't know that was the high that it was actually going to create, but I could have allowed it to run to this level, which is previous week's high, or at least up here, which would have been 8R, right? But definitely what it would have targeted would have been this high, which was the what do you call it? The a couple of equal highs that we had on the 5, I believe, and well, we can kind of see them on the 15 as well. Okay, so just to cut it off here, basically what you were able to see is how I apply this strategy, or how do I look for opportunities on a daily basis. I just look at price, look at what it has done through London, through midnight, basically just seeing if there has been, as an example, a run on sell side liquidity, a run on buy side liquidity, what side is showing aggression, displacement, fair value gaps in higher time frames, lower time frames, what has been happening basically through the entire midnight, or not midnight, but through the entire nights overall. And from that, as an example, as you were able to see today, I thought that we could be bullish due to what happened through London. But in other cases, we do have bullish scenarios due to London, but that doesn't necessarily mean that it will hold and we'll have an entire bullish session, right? So it's also about looking at what happens through the New York session, through the London New York kills on that session completely, and trying to identify what could happen. Because as an example, if I see a run on a low and then immediate displacement on the 5 minute, then I'm definitely likely to look for a run on a low and displacement on the 5 minute. I'm likely to look for buys, even though maybe London had the exact opposite, right? Because that doesn't mean that the trend has to be respected due to what happened through London, right? I actually have had that issue where London, as an example, gave me a lot of confluences that it might be bullish, but then through New York we actually had a bearish session, But as an example, if we analyze what happens through New York session, we were able to see that maybe a high was taken, then we see the displacement, and then, well, the interest, right? So for me, it's keeping in mind what happened through, as an example, London, but not giving it that much importance, right? So if we have a very scenario based by London, then we keep it in mind. We know that it's likely to do that. And if we have confluences through New York to follow that trend, then we're going to do it, right? We're going to do it. What are the confluences? I want to see a high or a low being taken, right? Depending on the trend again. And when that high or low is taken, I want to see displacement on the 5-minute, right? Very rarely will I, as an example, see displacement on the 1-minute and consider that enough after, as an example, high or low has been taken, because it tends to be a little bit riskier comparing to waiting for the 5 minutes to create a fair value gap, or displacement, better said, and then look for the lower time frame entry, right? Which again, the lower time frame entry is not necessary, something that I had actually stopped doing a couple of weeks ago, and I just started doing it again because it gives me a much better risk to reward ratio. And the 5-minute entries were a bit complicated because the stop loss all the way up to the high, it's just too much, honestly. So and the 1-minute entries honestly do show that they are worth, the stop losses are respected most of the times, and when they're not, well, there's nothing that we can do, honestly. Of course, the stop loss all the way up to the 5-minute fair value gap will be much better, but again, a very low risk to reward ratio at that point. So that's basically what I wait for. That's basically how I apply the ICT's concepts, and it has proven to me that it works fine. I've been backtesting it with Forex as well. The video, when I made the video on soft Forex, the first one, well, there's only one, I did, that account is, I think, at 367% or something like that, because of course I'm risking a 1%, and that's a 1% of the size of the account. So as an example, right now, if I take a loss, it's actually more than a 1%, because, well, the account is 3 times its size, right? It's as if I was risking a 3% of the initial balance, right? But that's the way it works. So I started another one, and that one, I think in 3 months I made 80%. I think I'm currently at 70 something. I think I left it. Yeah, it works fine. It's just that sometimes you do have a little bit of a both sides could work, right? As an example, today we did have reasons to believe price could go lower. I just wasn't really sure of it. I was not really trusting that potential trend that much. And we did have confluences to buy as we had confluences to sell. In this case, supposedly, so I have in my rules that if we have opportunity to sell and buy, I would usually take both of them. But today I used London as my extra confluence to say, okay, I'm not going to sell because London told me bullish, and I have confluences to buy here. I do have confluences to sell, but that'll be against London. Right? Again, I don't give that much importance, but if we have one side that doesn't really show much confluences, or I have a side that goes against London, but I also have a side that goes pro-London or in favor of the trend set by London, then I'm likely to choose that one, right? Because we have that extra confluence. We have the fact that, well, London did show that it could go bullish. So if we have confluences to go bullish, we don't only have the confluences through the session, through New York session, but also the confluences of what happened through London, right? Which is actually good to have London, as it has already set the trend most of the times, but sometimes it's actually not respected. So again, I'm gonna repeat myself here, but it doesn't necessarily need to respect nor London's high nor London's low, but it tends to follow that trend, right? It tends to follow that trend. And it's something that I've actually backtested this weekend, like how many times do we actually see London being respected or not respected? And I've realized that most of the times it is respected, right? Even though the low or the high fails, there's really not much that we can actually do. So hope you enjoyed this video. It was an interesting one to make. It was lucky that we had interest today. I don't know if lucky, but it was lucky to find them and be able to trade them live. So that's really all that I wanted to mention here. Hope you enjoyed this video. Hope you took something away from it. I'll be seeing you until the next one.